G'day listeners and welcome to another APS Weekly News Bulletin, keeping you up to date and well informed on the Australian housing market. Story number one, where is seeing the strongest population growth in Australia? Article by Michael Mudisic titled Top of the Pops. Australia's population reached 27,194,000 in June 2024, growing by 541,000 residents over the past year. The top 20 major urban areas accounted for 88% of that growth. Melbourne led the charge with an increase of 140,000 residents, followed by Sydney and Brisbane. Notably, growth has accelerated in most capitals over the past 12 months compared to the previous 20-year average, especially in Brisbane and Perth. However, some regional centres like Hobart and Cairns saw declines in growth momentum. Overall, the big five cities added nearly 400,000 people last year, highlighting our continued urban concentration and the growing strain on metropolitan infrastructure. Discussing local government authorities, over the past year, Australia's fastest growing local councils added 225,000 new residents, just over 40% of the nation's total population growth. Brisbane led the pack, followed by the Gold Coast, Logan and Melton. Some LGAs like Logan, Melbourne LGA, and Cumberland are seeing growth rates nearly double their 20-year averages. The outer belts of most capitals continue to absorb the bulk of new arrivals, especially in southeast Queensland and Melbourne's western fringe. It's a clear reminder that population pressures aren't just a capital city story. They're a growth management challenge increasingly shouldered by suburban and peri-urban LGAs, many of which are already straining under infrastructure shortfalls. Interestingly, and in contrast to what many Taswegians would say, Glen Orchard Council, immediately north of Hobart, came in 537th in terms of population growth with a loss of 125 residents last year, followed by Hobart, ranked at 538th, down 130 peeps, and Launceston came in last, with 261 fewer residents in 2024 when compared to the 12 months before. Diving deeper into the suburbs, of Australia's 2,473 outer suburbs, just 20 absorbed over 57,000 new residents in the past year, more than 10% of national suburban growth. Victoria dominates the list with 10 entries in the top 20 list, led by Fraser Rise Plumpton, which grew at over 3 times its 20-year average. Suburbs in Western Sydney and southeast Queensland also feature prominently. These areas are fast becoming the country's new housing frontiers, offering affordability, land supply, and access to basic infrastructure. Growth in these hotspots has accelerated dramatically, up 177% compared to their historic norms, highlighting a national shift towards the outer suburban expansion and the increasing importance of managing urban sprawl and service delivery. Now, in summaries of this article, guys, I think it's very interesting to sort of unpack. Obviously, your two biggest cities were obviously took on the most residents in that time frame, but if we look at those cities being, 5 to 6 million people populations, what really interests me more are the smaller areas that had similar or not too far behind population growth numbers as well. So again, they said coming in behind was Brisbane, closely behind was Brisbane and Perth. Sitting around just over 2 million residents in terms of population of those two, you're talking about a significantly smaller population size, receiving quite a decent number of people moving there as well. So it's not surprising to see, the amount of growth in those areas and housing supply pressure and constraints in those areas, as opposed to, say, Sydney or Melbourne, which may not have been as greatly impacted. Now, the other thing to throw into the equation, now they've called it a regional, but obviously you've got Hobart there as well, being a capital city, literally losing residents. You've got Hobart and the outer councils literally losing residents as well. And as they bring more and more property online in Hobart, I would not be surprised to see over the coming years maybe a bit of a decline in that area, especially with the amount of growth they already had in the lead up. They had it pre-COVID and then obviously during COVID as well. They had quite a run, and it's not surprising to see obviously supply ticking up there and prices coming firmly off the boil as well. So very interesting to note across those, looking at all these different sorts of areas. But again, guys, a massive increase in population growth in that time frame too. And also they reckon that we're going to hit 30 million residents pre-2030. So we're talking another 3 million residents in the next 5 years. And you see by that growth rate being nearly 600,000 over the course of, or 550,000 over the course of the 2024 financial year. Very, very interesting to note the amount of pressure we're going to see coming in versus a serious shortfall of housing that we already have. So, that continued pressure, obviously in the correct areas, is going to lead should lead to more price growth as well. Story number 2, guys, and the gap between regional and capital city housing market performance narrows. Article by the research news team at Cotality, formerly CoreLogic. The data shows regional dwelling values rose 1.5% in the 3 months to April, outpacing the 1% quarterly rise in the capital cities. While the combined regional's April quarter result marks a 0.5% increase from the 1% lift seen in January, the pace of growth in capital city markets has picked up more sharply over the same period, shifting from a 1% negative decline over the 3 months of January to a 1% rise in the 3 months to April. Totality economist Caitlin Ezzi said that the data shows a clear convergence in growth trends, with regional values remaining positive amid upswing in the pace of capital city growth. We're also seeing a convergence among the regions, with momentum easing in recent high growth markets and picking up previously softer regions, Ms. Ezzi said. The performance gap amongst Australia's 50 largest regional significant urban areas has also narrowed. The variance between strongest and weakest quarterly performance dropped to 7.3% in April, half the 14.7% percentage point difference recorded in July last year. Western Australia continues to dominate and Queensland is falling behind. WA dominated the quarterly growth leaderboard, with values in Albany up 7% and Geraldton rising 4.5%. South Australia's Victor Harbour, Goolwa, followed closely behind, increasing 4.2%, while Mildura and Mackay both at 4%, rounded out the top 5. While still taking out one spot in the top 5, these results show weakening Queensland's grasp on the leaderboard. After dominating throughout 2024, the pace of quarterly growth has eased significantly in Queensland's mining markets and regional markets amid worsening affordability and global economic uncertainty. Despite the softer quarterly results, both Queensland and WA continue to dominate the top 5 spots for annual growth. Geraldton values served 26.9% over the year to April, while Gladstone, Townsville, Mackay, and Albany all saw annual increases above 20%. At the other end of the spectrum, Bathurst, Nelson Bay, and Geelong recorded mild quarterly declines, with values falling 0.3%, 0.2%, and 0.1% respectively. Warrnambool experienced the sharpest decline on an annual basis, with values down 4.2%, followed by Ballarat and Geelong, each falling a negative 2.2%. Selling conditions reflect annual growth trends. The selling conditions broadly followed the trends in annual growth, with WA and Queensland regions posting the strongest results, and New South Wales and Victoria reporting some of the weakest. Rockhampton, Gladstone, Mackay, and Townsville recorded the shortest time on market over the past year, recording medians of 11, 12, 13, and 13 days respectively. Sellers in Albany recorded the smallest vendor discounts at negative 2.3%. Rents slow, but regional markets stay ahead. Annual rental growth across regional Australia eased to 5.5% over the year to April, down from the 6.7% recent peak in September, but still nearly double the 2.9% increase recorded in the capital cities. Ms. Ezzi said the easing rental trend is largely driven by affordability challenges, household consolidation, and slower overseas migration. Even as growth moderates, we continue to see reasonably strong rental increases across most regional markets, reflecting tight supply and shifting demand patterns. Just one market, Wagga Wagga, recorded a quarterly decline, with rental values down 0.5%. Albany and WA led rental growth with a 5.7% lift in the quarter. Over the year to April, Albany also posted the highest annual rental growth, up 13% or $68 a week, alongside double-digit increases in Geraldton and Goolwa in Victor Harbour. Now, in summary, guys, obviously we've seen some really, really strong performances in a lot of regional markets in Australia. You've got areas like Albany, Geraldton, Townsville, Mackay, Rockhampton, all these sort of markets producing massive growth. Geraldton, obviously the strongest annual growth, value growth, up 27% or around $107,000 over the year. Congrats to all APS clients that benefit from that. While Gladstone, Townsville, Mackay, and Albany all saw annual increases over 20%. Really, really interesting to see, guys. A lot of these markets still producing really good runs, really good numbers on the board. And I think the other interesting thing to note is a lot of regions still producing really good rental growth over that period as well. Now, yes, the rate of rental growth may have slowed, but still seeing 5 to 6% rental growth over the course of a year is nothing to sneeze at. I remember in the decade between 2010 to 2020, almost nothing grew from a rental growth perspective during that time frame. So to see some significant gains over the last 2 to 3 years, and these regional markets still running from a rental growth perspective, shows really, really strong emphasis on how tight those markets are and are remaining, which is obviously going to, translate into better cash flows as these rents continue to rise and as rates and interest rates drop off as well. So very interesting to note across the board with that, and a lot of these regional markets actually outpacing pretty much every capital city in Australia. So very, very interesting to note, and kind of good, because a lot of people were very skeptical or nervous about investing into regionals. Funnily enough, I was one of them when I was, investing in Brisbane, Adelaide, Perth. I was always a bit skeptical about regionals. Didn't really want to invest there when a capital city made sense instead, which is funny because I'm a boy from the bush. But obviously, as a lot of those capital cities wound down in terms of the correct time to buy a property in those locations, transitioned, pivoted into a lot of regional markets that have performed extremely well. And it's really cool to see that continued rate of growth, increasing and still staying there from a strong perspective too. So really good to see, guys, a lot of these regionals, we're not even closing the gap, but actually getting in front of capital city value growth and rental growth as well. And not surprising at all, to say the least, with those very, very tight housing markets and the amount of population growth we've seen as well. Now, guys, that's a wrap for another APS Weekly News Bulletin. I hope you took some great value from today's episode. If you did, as always, please send it on to someone else you also think could take some great value out of this episode and would benefit from listening to this as well. And until next week, guys, that's another APS Weekly News Bulletin on the Scouting Australia podcast.